Hi and welcome to Carnegie and our analyst presentation on Ependion. My name is Markus Almerud. I'm an analyst here at the bank. So Ependion makes routers, switches and industrial panels for harsh environments. We have a fair value range of 149 to 163 Swedish krona. The investment case in short is that we see structural growth in the majority of end markets and we see double-digit organic growth on average in coming years. Almost 30% of sales are train and trackside, 20% is energy and 13% is infrastructure. Margins have expanded significantly, but there is more to go for. The margin target is 15%. We believe that the driver of this is continuous volumes and Beijer Electronics. The business unit has improved its trough margins, but is not at the target. There has been a strategic review and the changes are being implemented. A couple of words about the short-term trends. Order intake was lower than normal in the second half of 2023 on the back of one large train customer changing order horizons. This customer put in a major order in Q2 last year and has since been ordering less. The low order book will be a challenge for sales and hence the margin in the second quarter of this year, but focus should be on the order intake. The order intake improved sequentially in the first quarter, and purchases from the customer who caused the decline are coming back, and we hence expect normalization. And excluding this particular customer, growth has been stable all along. The margin is not at the target. Lifting the business unit Beijer Electronics is the key to getting there, we think. The strategic review, which will focus operations, is being implemented, and we have seen margins improve sequentially in the business unit from the fourth quarter. So in short, we might see challenges on sales in the second quarter, but focus should be on the order intake, which is leading. Underlying demand remains good, and we've not seen any signs, nor do we expect to, that make us question the long-term case. So let's spend a little bit of time on these long-term trends. We will focus on the energy segment. We believe that the energy market, and in particular the electricity infrastructure market, is a key revenue driver for Ependion. The electricity market sees several structural drivers. Consumption of energy will only grow by around 14% in total until 2050. There are plenty of efficiency gains to be made, but the mix in the consumption is changing. We should see about 50% electricity and hydrogen by 2050. Electric power consumption will grow 3 times over the coming decades. Looking at production, the mix is also changing. Renewables share will double in the coming 15 years and will go to close to 90% by 2050. At the same time, the flows in the market are changing. Traditionally, we have seen energy flows from generation to consumers and money flowing back. Going forward, we expect to see flows in both directions. This will require more information in the grid and the infrastructure, and this is where Ependion has its exposure. So in summary, Ependion may face challenges in the second quarter on the back of a low order book, but focus should be on the order intake and on the structural drivers, which are very much intact. Ependion is well exposed to several mega trends. Look through any short-term challenges. The journey has just begun.